Hello, Laura from Ruoff again. I am here with another set of frequently asked questions, and today is student loans. Definitely something we contend with on a good majority of our files are student loans. So, the question I usually get is, how do these affect my loan? The first thing to know is that the student loan counts against your debt to income ratio, and it has to count in some kind of way. So even if you have your loans in deferment or forbearance or any of those types of things, we do have to count some kind of payment toward your debt to income ratio. Anytime you have late payments, we see a lot of trouble with student loans moving from one company to another and payments are marked late, that kind of a thing. Really helps to keep on top of those things so that it doesn't become an issue and affect your score when it comes time to buy a home. The most trouble that we do have comes from people that have their loans in deferment. So I've had a lot of people say to me, well, Laura, I don't pay anything right now on my student loans, but then they have a large balance that we somehow have to figure into their debt to income ratio. The other issue that we run into sometimes is if you are on an income based payment plan. So we do have some ways to work through that one a little bit easier. I would say if you're planning to buy a home, please keep any documentation that you have from your student loan servicer as far as what your payment's going to be, how they set it up, all of those types of things. Those will help us show exactly what we need to show for the mortgage. Most loan programs, if you have your loans in deferment, we have to count 1% of the loan balance towards your debt to income ratio. So if your student loan amount is $10,000, we have to count $100 a month toward your debt to income ratio. For some people, that's not any issue. For some people, if you have, tens of thousands of dollars, we can get into very large amounts counting towards your debt to income ratio. If you are able to show that it's income based, each loan program has a different way that they view income based. But like I said, as long as we have that documentation, we can typically do that. Also, a question that I get pretty frequently in regards to student loans are parents that have co-signed for their children. If that account pulls on your credit report and you are an obligator, you're obligated on that loan, we do have to count that towards your debt to income ratio, even if someone else is making the payments or even if that child is still in school. So just wanted to hop on and share a little bit about that. That is a question we get. I'm always happy to sit down and look at your situation specifically, so let me know if I can help.